And we are live, I think. There we go. What's up, everybody? Excuse me. Let some people roll in. Let me pull up the futures and see how they're doing. All right. Okay. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It's Stock Watch Sunday. It's Sunday, April 17th, 2022, and it is another great stream, I think, that I have set up for you guys. The top 10 stocks to watch this week. I got 10 of them to watch this week because earnings is really starting to kick off. There's going to be a ton of stocks that are going to be reporting earnings this week, Monday through Friday. I'm going to be giving my live reactions to those on Monday through Thursday at 3:45 p.m. Eastern time. So make sure you hit that subscribe button, hit the notification bell, and you guys will not miss those reactions. As always, I'm going to hit you guys up with a starting five. We got Tiger's Edge, Allen 316, Darren, Rust Star, and Lawson. What's up, bro? Good to see you, man. You guys are our starting five. If you missed the starting five, it could be because you didn't subscribe or hit that notification bell. So make sure you do both. And on your way in the door, make sure you hit that thumbs up as well. Today's show has been brought to you by Own the Chaos, the Chaos crew more specifically. Guys, if you want a watch list from yours truly, if you have trouble deciding where to go in the market each and every morning, I provide some insight, some guidance, if you will. I have 5 stocks that I put up every single morning and about a half hour before the market opens. And if you guys want access to that, it's $4.99 a month. It doesn't break the bank, but it helps support the channel. You can become a Chaos Crew member by hitting the join button next to subscribe, or you can go to ownthechaos.com as well and join there. All kinds of other extras and goodies in there as well. We have our Discord group, which is a great community to be a part of. If you guys aren't a part of that yet, make sure you're hitting that join button next to subscribe, or go to ownthechaos.com. We'd love to have you guys as a part of the crew. Okay, so this week it is going to be wild. So we have a couple of really great earnings that we're going to go over, guys. But even though I have these top 10, there's so many other earnings that are worth watching as well. So if I didn't mention the one that you're looking at, make sure you're putting in the chat. I would love to get your guys' thoughts on this as well. Right now, looking at futures, S&P is down about 0.5%. The Dow's down around 0.5%, and the NASDAQ is down around 0.75%. Oil is up another 1%. We're looking at crude oil. WTI crude's at 107.85. So that's where we're at here so far. Now we're only about an hour and a half into futures, so anything can happen. As we always know, we see all kinds of crazy numbers in the futures numbers, but those are your numbers right now, nevertheless. Now, as far as earnings are concerned, if you guys don't follow me on Twitter, I actually put out a poll. You can see the poll that's in the chat right now. If you're not privy to that, make sure you're checking it out. Make sure you vote there. I asked you guys if you are bullish or bearish this week, and we'll cover that in a little bit. But I did put this out on Twitter. I asked whose earnings are you looking forward to the most this week? And I put Netflix, Tesla, Snap, and American Express. I guess it wasn't even fair. Maybe I should have just left Netflix out of it. But as you can see, 70% of you guys said Tesla, 20% Netflix, 8% Snap, and then 2% American Express. So, obviously it's pretty clear who the winner was there, but there are some really interesting ones that I think a lot of you guys are going to really enjoy seeing this week. So let's go ahead and get started into some of that. Now, again, make sure you're putting in the chat some things that you want to check out. And I would love to get your guys' thoughts and opinions on whatever it is that you're looking at for the week. And then we can discuss it after I go over these top 10 stocks. So make sure you guys aren't going anywhere. And let's go ahead and get into the first one. So the first one's going to be not Delta, as you can see the charts pulled up here, but it's Bank of America. So Bank of America reports earnings tomorrow pre-market. So before the market opens, we'll have those earnings from Bank of America. This is kind of a continuation from some of the financials that we saw last week. We saw Goldman Sachs, JP Morgan, Morgan Stanley, the big banks that were reporting last week, towards the end of last week, and a pretty light week. It was, 4-day week, obviously. So this is a little bit more of a continuation on it. We're going to see a couple of the financials on Monday, Tuesday. Bank of America is the big one here. One of the key metrics to watch here is that can they change the sanction narrative? Last week, we saw a lot of the financials really take a hit. And this is the daily chart on Bank of America. As you can see, it's been pretty rough. So some of them have really taken some pretty big hits because of the issues that they were seeing through, some of the revenue that they're going to be missing because of the sanctions on Russia. I believe one of the bigger ones, if I recall, somebody correct me if I'm wrong. I should have pulled this up. J.P. Morgan, I think, missing out on $500 million in revenue for due to the sanctions in Russia. However, the exposure here still isn't that great, right? So, like the impact here, especially to somebody like Bank of America, I would imagine isn't going to be that significant, even though they do business in Russia. It's not going to be something that I think makes or breaks them. The expectations here are 74 cents per share. Revenues around 23.1 billion. I would say that there's probably an expectation that we see some sort of miss, whether it's with earnings or revenue. I'm not quite sure. My best guess is probably going to be on revenue. We might see a miss on revenue, but this is going to be an opportunity. You see, there's a nice little support here at 37 bucks. Has yet to have broken over that. So one of two things could happen. We could see some really nice numbers out of Bank of America. Maybe they give us a guidance or an outlook that says, hey, you know what? This is a one-time thing. I think that, with the issues with going on with Russia, there's positives here as well. Consumer demand is still very strong. People are out there spending money. They need to take out loans, and Bank of America is willing to give them those loans. So loan demand is high. Also, interest rates. As the Fed comes in and raises interest rates, Bank of America doesn't have to lift a finger, and then they continue to get revenue off of interest rates going up without even having to spend any money on trying to bring in additional revenue. This is just free money that's coming in the Bank of America with interest rates going up. So I think there's a lot to like here with Bank of America. As Alan said, that the Bank of America chart is pretty scary. Yeah, so that is one thing that I would say, right? I just gave you the kind of bull case, but the bear case here is that Bank of America does give that doom and gloom kind of vibe, and investors aren't really positive on the outlook for Bank of America. Then it could get ugly below 37. You can see 37 was a pretty decent support for it back on July 21st. And now we're seeing it kind of retest those lows again. So if it breaks below that, and we can see that was a support here again in April of last year. So if it breaks below that, I think that it could get very treacherous for Bank of America. So that's certainly something to keep an eye on. But I still like it here. I still think that this is a good opportunity to get in on Bank of America. The balance sheet's phenomenal, and I don't think that this is going away anytime soon. If it does dip, I would look for this to potentially be a good opportunity. All right, next up we have Halliburton. So Halliburton reports earnings on Tuesday pre-market. Estimated earnings per share is 34 cents. And the revenue here is 4.21 billion. If you guys don't know anything about Halliburton, it is the oil services company, drilling, that sort of thing. So exploration. And so Halliburton, like I said, they report earnings on Tuesday pre-market. So looking at this, you can see the chart is just absolutely insane, right? I mean, we've been seeing not all time, 52-week high after 52-week high again and again. But guys, I don't see this as slowing down anytime soon. I mean, I just got done telling you that oil hit almost $108 a barrel here in the futures market right now. And I've told you guys this. I don't think that anything the Biden administration is doing or the White House is doing right now to resolve the quote unquote resolve the issues regarding supply of oil are doing anything. Now, they did on Friday. They said they will resume selling leases to drill for oil and gas on federal land starting Monday. Even crude oil, even as crude oil prices rose in 2021, shale producers were reluctant to ramp up drilling activity. So the reason being is because the last time they did that, they spent a lot of CapEx, capital expenditures, on drilling, and then demand slowed significantly, right? And then that's why we saw a huge drop and no movement virtually at all on Halliburton and many of the other oil services as well. Here's the monthly chart. And you can kind of see that Halliburton hasn't really done anything. This is 08, right? And it didn't really go anywhere. We saw some spikes here, but it still has yet to have even reached the highs that we saw back at $58. Last time we saw it around there was around January of 18. And then again, try to retest it in December of 16. So I still think there's a lot of upside here for Halliburton. Again, this is the monthly chart. So Halliburton and some of the other energy companies aren't really necessarily interested in spending a lot of money leasing land from the government to drill, because they kind of have communicated to investors, people who are invested in the company, that, hey, listen, we don't want to mess up what we did last time, or really over the last decade, where we spent all this money and then we didn't have anything to show for it. We want to reinvest it and give that money back to you, whether it's share buybacks or dividend increases, the dividend yields go up, what have you. The energy stocks are one of the best dividend stocks to own in the stock market. So because of the yields are so high. So I think this will be very interesting. Another little interesting piece of information here is that Halliburton has posted 3 straight quarters of triple-digit earning gains, and sales growth has accelerated in the last 3 quarters as well. I imagine that trend continues. So just because Halliburton's going up here, I think this is a classic case of buy high, sell higher. I'm not saying that you should buy Halliburton at 52-week highs, but the fact of the matter is that even if it has a slight pullback, let's just say to $39, I think that there's definitely some upside to this still, even with the strong moves that it's had. So I really like this. I think that Halliburton is one that's probably going to continue to rock and roll. Schlumberger is also reporting earnings this week as well, but I like Halliburton. I think they have a better balance sheet, and they probably have a much stronger move than Schlumberger as well. All right, so there you have it. That is on Halliburton. That's the second one. Netflix is the next one here. Let me just double check. Make sure I'm on the right track here. Yeah. So Netflix is going to be an interesting one here too. I think that this has been so tough to watch, right? Netflix reports earnings Tuesday after hours, which I, of course, will be giving my live reaction to. So make sure you guys are subscribing and hitting that notification bell, because I'll be live at 3:45 p.m. Eastern time to go over the numbers here for Netflix and kind of give my reaction to those. So make sure you guys are tuning in. It's always a good time. Analyst consensus estimates are looking for Netflix to have added around 2.51 million subscribers for the quarter, which would mark the least since the second quarter of 2021. This would bring Netflix total subscribers to just under 225 million. In the same quarter last year, subscribers grew by nearly 4 million. That's via the Motley Fool. And then their estimated earnings per share is $2.90. The revenue is at $7.39 billion. I think it's going to be a rough go for Netflix. I think that this is going to be a really, really tough quarter, just because the competition is getting so crowded right now. Now, Netflix has really tried to go all in on gaming, and perhaps we could see some movement there, but I don't think it's going to be enough. The big metric here, it's not whether or not they beat earnings, right? And we've seen this from Netflix and some of these other metrics driven stocks. Nobody seems to care, at least investors or institutional investors seem to really care about earnings per share or revenue all that much. They want to see subscriber growth. And if Netflix comes in and misses on that subscriber growth like they did last time, it's going to be a rough go. It's going to be a rough day for Netflix on Tuesday and going into Wednesday after hours. Like I said, I am going to be reacting to those live, so make sure you guys are tuning in. But a few key points to watch for. $330, $329.82 is going to be where the low was, the 52-week low for Netflix. And so if they come in and miss on subscriber growth, then I think that this is going to come a lot lower. We could see this come as low as $250 per share. It's pretty interesting to see how this is shaken out, right? I mean, this is touted as one of the big tech stock giants. And now, because competition is seeping in and there's so much attention that's requiring so much time from people, that Netflix doesn't seem to be anywhere near what it was during the pandemic. Can they change that around? We'll have to wait and find out. Next one is IBM. IBM comes out on Tuesday after hours as well, which I'll be giving my live reaction to. Now, IBM isn't necessarily one that I'm super excited about, but I will say that if in the environment that we're in, given the stock market, how it's been so volatile and how we're worried about interest rates going up and talks of recessions and that sort of thing, this is a good defensive type stock to get into. It's a value tech stock. It used to be a giant back in the late 90s and then the dot-com bubble and all that. And this is one of those ones that just survived through all of that. On Tuesday after hours, their estimated earnings per share is $1.38. Revenue is at $3.85 billion. They launched a new generation of mainframe computers this month, which should drive growth in its hardware business. I think that that's going to be interesting to hear from them on from IBM. So I think that this is certainly one to watch for, but also not just because of their earnings, but because of the defensive nature in which people try to gravitate towards stocks like these in times of uncertainty. We're seeing that already with United Healthcare, right? That's another good defensive stock. This is United Healthcare right here. You can see how well this is done because of kind of that rotation that we've been seeing. And I think IBM could certainly be in that conversation as well. $130 is going to be the area to break over. I think that if we get good earnings from them, wouldn't surprise me to see this maybe break over the 200-day moving average represented by this purple line. And I think that we can see it go up over 137 if they come in strong and give us a good outlook. So because not only will they have those tailwinds of it being potentially a defensive type of name, I think that given some of the other developments they have, it could also be viewed as a growth stock. I mean, we could be seeing some pretty significant growth from IBM as well. Next is going to be Procter Gamble. They have earnings Wednesday pre-market, and this is also going to be an interesting one. I told you guys earlier that consumer demand has been very, very strong, and I'd be curious to see how Procter Gamble has fared despite inflation, despite supply chain issues, right? Like this is going to be one that I think could be interesting to watch for. Estimated earnings per share on this on Wednesday pre-market is $1.25 with revenue coming in at $18.73 billion. We don't know whether P&G can pass along prices without threatening the sales expansion, as I mentioned with inflation. And the challenge could hurt some earnings growth here. It slowed to just 2% in the previous quarter compared to 18% a year earlier. Now, obviously, with everybody being at home and the pandemic and restrictions, Procter & Gamble was in such crazy high demand. Can they keep up with that? And is it going to be a good day for Procter & Gamble? If it is, I would watch to see this break over the $161 resistance. We can mark that here. This is also very interesting because you can make the argument that this is potentially a nice cup and handle pattern on the daily chart. So could the catalyst be that they beat earnings and it breaks up over this resistance to maybe test those 52-week highs of around 165? I think it's possible. So keep an eye on that for Procter & Gamble, as I think that's going to be an interesting one to watch. All right. So we're about halfway through. Guys, how are we feeling? Let me check in with some of you guys and see how you feel about the list so far. How you feeling about earnings? Raylan Records says futures red and not looking good. Hopefully a red open to green close. Yeah, I made mention to this, Raylan, too. Futures aren't looking good right now, but we've seen this time and again, right? Where they don't look good. And then all of a sudden it's like the next day is as if none of that ever happened. So we've seen it both ways, right? Where the Dow's up 600 points overnight and then just ends the day red. So I wouldn't put too much into that, but let me know what you guys are watching as well this week as I'm continuing to go through some of these other stocks. We've got about 4 or 5 left, and I would love to hear from you guys if there's any ones that I missed. Checking in on here. Seems like Netflix dropped after the Cuties movie. Nah, I think it's way more than that. Oliver Thorpe says Netflix drops well into the 200s. Do you think it's a buy given that it's a pre-pandemic territory and they have picked up a lot more subscribers despite the growth slowing down? It's very interesting, right, Oliver Thorpe, because yes, it will be down there to the pre-pandemic levels, but I think that the reason being is because Netflix is potentially in danger of losing growth. They've gotten so big, and look, a quarter of a million or a quarter of a billion people subscribers. That's insane. It's huge. So I think that Netflix is in a really great spot if they can figure out how to pivot to some extent, right? We're seeing how YouTube and Apple and Amazon, some of these other bigger players, they're getting into live sports, they're getting into streaming, whereas Netflix has for some reason refused to do that. So I don't know if it's because they're just doubling down on the gaming side of their business and trying to cultivate and grow that, because perhaps it's just too competitive. I mean, it's not just those that I've mentioned. You got Disney in there as well, and there's obviously the legacy companies, CBS or Paramount. So I think that those are going to be, maybe it could be a reason why Netflix just decided not to throw their hat into the ring there. and perhaps pursue the gaming side of things. So we'll see. I don't know. That's a great question, and I guess we'll have to kind of see where this goes from here. See a couple of other stocks that people are watching here. I'll definitely get into those. But before we do, let me go ahead and show you guys what I'm looking at next. And that's ASML. ASML Holdings, semiconductor play, hasn't had a really good 6 months. Really, since September, it's not been looking great. In the semiconductor space is you know, for the most part, not been good lately because of supply chain issues and demand's just not or the supply's not there to really meet demand, and so that's definitely it hurts growth. And so if it's hurting growth, that means that people are more inclined to sell. That being said, ASML, once we start to see things turn around, I think it's going to be one stock to own, and I think that we see this return to potentially those all-time highs at 895, and I think that we could see this potentially being $1,000 stock. The estimated earnings per share Wednesday pre-market at $1.79. Revenues at $3.86 billion, and it's the world's only producer of the extreme ultraviolet lithography machines needed for foundries to produce the world's most advanced chips. Because of all this advantage, the current chip shortage cannot end without ASML's help, and that's why I think that this is going to be very significant for the company once we get some of the supply chain issues online. Their price to earnings ratio is at 35. This is the lowest level that we've seen since 2020. So the stock's cheap, guys. You want a semi play that's cheap? ASML is one of them. I mean, you look at NVIDIA, for example. We take a look at NVIDIA's PE. And NVIDIA can't function. They can't do anything without the help of ASML. They're at 37, 38 times. And so I think that this is, ASML certainly one to watch for. And I think that we could hear from them about their pricing power in the time of just this terrible shortage that we're experiencing in the semi space. Taiwan Semi reported last week, and it was a very interesting move for them. We saw it kind of move up, but then it faded. This is Taiwan Semi move up, and then it faded because of what was going on Thursday with most stocks selling off. So this will be an interesting one to watch. And that's ASML pre-market on Wednesday. Next is going to be Tesla, and that is Wednesday after hours. And of course, I'll be reacting live to this. So make sure you guys are tuning in at 3:45 p.m. Eastern time on Wednesday to get my live reaction. If you guys or want to get the latest on Tesla's earnings updates, make sure you're hitting that subscribe button, hit that notification bell, because I for sure will be reacting this one. And it'll be very interesting to see how this shakes out. They came in with sales below what the expectations were, but they were record sales nevertheless about a month ago. So can they translate that into positive earnings and a great outlook? The early April announcement revealed that the company boosted its delivery volume by 68% year over year, which is phenomenal, especially given the time that we're in right now. We're not hearing those kind of numbers from Ford, GM, or any other legacy companies. And the investors were hoping for slightly higher growth, as I'd mentioned, but the stock is still up headed into Wednesday's report. This is via the Motley Fool. That optimism will be tested this week, as Elon is obviously dealing with some of the Twitter drama as well. Their earnings are on 420. Of course it is, because it's fucking Elon. And it'll be interesting to see where this goes. Fundamentally, it's overvalued, right? I mean, we've talked about this. The forward PE on this is ridiculous for a car company. And listen, I know it's not a car company. It's not just a car company. And we've had those talks before. The forward PE is at 92 times next year's earnings. It does have ridiculous growth just given the environment that it's been in, but I don't know if Tesla can get out of the way of this one. And what I mean by that is the issues going on in Shanghai right now with the restrictions taking place in China. We've seen reports of their China facilities shutting down and halting production. Now, Texas just opened up, and so did Germany. So I think that there's certainly some potential there that they could give us as far as guidance is concerned that maybe causes the stock to go up. But I don't think it's going to be good enough for Tesla to beat earnings Wednesday after hours, which are expected to be around $2.26. The revenue is around $17.76 billion. Holy shit. That is wild. But so that's going to be a very big question mark. This is going to be really exciting to watch. Am I optimistic about Tesla? I don't know. I think I'm kind of indifferent. I think that when you look at the challenges that they've been facing, I think there's a lot of them. There's a lot of reasons that I probably would want to stay away from Tesla versus the tailwinds here. Now, what I will say is that they come in and they give us some Cybertruck news, or they give us some semi-truck news, something that says, yes, we're putting out something other than the Model Y and the Model 3. I think the stock does go berserk. So there's going to be, and we always know this, right? Like Tesla always tries to throw out some sort of wild card that gets people excited. And I think that perhaps that could be something that saves the stock on Wednesday after hours. Next is going to be Union Pacific. That's on Thursday, pre-market. You guys might be scratching your head like, what the hell? Why we have Union Pacific on here? This is like grandpa stock. It's a transport. It's one of the most important transports in the country, maybe even the world. Their estimated earnings per share is $2.56. Revenue is around $5.68 billion. The transports themselves have absolutely been bludgeoned over the last couple of weeks, but Union Pacific is starting to turn back up. I really like this stock, and I think that their ability to raise prices without overly denting shipping volumes has allowed Union Pacific to grow its sales and profits during the pandemic, and it's carried on to even now. The revenue rose 12% year over year to $21.8 billion in 21, and their operating income climbed 15% to $9.3 billion. This is also interesting. Their earnings per share also were boosted by $7.3 billion in stock buybacks, and they grew an even more impressive 21% to $9.95. So this is a great stock to own, guys. And I think that their earnings are going to be pretty stellar. Estimated earnings per share, if I didn't say so already, is at $2.56 and $5.68 billion in revenue. I think that they beat that, and I think that their outlook is going to be very strong. Why? Because supply chains are still an ongoing issue, but demand is still there. And we have seen consumer demand, especially from the retail side of things. I think retail in general has really kind of shown us what's going on with the American consumer. And it's that they're still spending money. They're spending money on plane tickets because Delta talked about how crazy it was as far as they were concerned. They saw record numbers in demand. And we're seeing Lululemon, we're seeing Levi's, we're seeing some of the retail stores also talk about how people are still out there spending a shit ton of money. And the only way that they're going to, be able to buy those products is if Union Pacific ships them to those places. So I think that Union Pacific is actually going to be a good one. It's also a good defensive play too. So in a time where we're looking for good value stocks and looking for good stocks to own that have pricing power, especially in a rising rate environment, Union Pacific is actually going to be a good one to watch for. Next, we have Snap. And this is interesting because you guys know that for the last 2-3 years, I've really liked Snap. And it's obviously fallen off a little bit from its highs. I would say, I'm not even going to say a little bit, a lot from its highs. 83.34 was its all-time high. It's now trading around $33. I thought it was a solid buy when it was down in the $20 range in the teens, and obviously has made a lot of people a lot of money since then. And this is an interesting time for Snap. Estimated earnings per share Thursday after hours is 1 cent. Revenue is expected to be around $1.07 billion. The daily active users is going to be very important here, as it was, and notice I'm saying was, the most popular app being used. Around 90% of young adults between the ages of 18 to 24 were on Snapchat and using it. It has been dethroned by none other than TikTok. Over 90% of young adults between 18 and 24 use TikTok on a regular basis, and advertisers just can't get enough of it either. It's addictive. People are constantly on TikTok. Firsthand experience, by the way. And so this is going to be very interesting for Snap. Can Snap really overcome this? Are they going to be able to address it? Are they not even worried about it? Because they have other technology that TikTok doesn't have that I think also gives them this competitive advantage. And that's their AR technology, their augmented reality, and how they fit potentially in the metaverse is going to be very interesting as well. So looking at this, I think that there's going to be potentially some treacherousness. I think that we see a little bit of a downturn in daily active users or monthly active users, and their revenue per user is going to be very interesting as well. So, do I like Snap here? I'm not sure. I think I probably would wait to see if this comes back down to 27.81 because I do think that they could potentially miss this number. Maybe not on earnings per share or revenue, but I think that when investors look at Snap, it's just like when they look at Netflix. They don't necessarily care about those earnings numbers. They want to see the growth. They want to see those active users. Are they up or are they down? And what's the outlook for that growth moving forward? And if they don't like it, they're going to sell the shit out of Snap. So be careful holding on to Snap. Lastly, to round out the week, one of my favorites, and that's American Express. I just got done telling you about how Delta talked about record demand over the last 5 weeks. Record demand, and it's not stopping, guys. We still have restrictions that are going on in Europe and Asia. And once those open up, Delta is going to do extremely well. And this benefits American Express. American Express is a credit card of choice for anybody who's traveling. And they have a partnership, I guess a partnership or a relationship with Delta and some of the other airlines as well. You get really good miles and all that good stuff. You guys know the deal. American Express is taking a pretty decent back seat as well. Their forward PE is at 18 times next year's earnings, which is hilarious. It should be way higher than that, in my opinion. I think it should be around the 22 to 24 range. And looking at this, I think that what I just got done telling you about consumer demand and how the consumers continuing to spend money, they're using their American Express cards to do so. And I think that AXP, one of the best ones to own. Visa is certainly up there as well, but I think even American Express stands to benefit even more from the travel that we're going to be experiencing, the travel boom. And I've said this now since the first of the year. I feel like I sound like a broken record sometimes, but travel is going to be absolutely wild, and we're already starting to see that. When Ed Bastian said that during his earnings call last week, and we're seeing booking holdings also talking about this crazy growth that they're experiencing. I think American Express benefits significantly from this. Their estimated earnings per share $2.43. The revenue is around $11.6 billion, and they report Friday before the market opens. And I think this is going to be one to watch for, guys. I think that American Express crushes it. And, I'm not telling you to buy it or anything like that, but it's certainly going to be an exciting one to watch. That's for sure. And guys, those are your top 10 stocks to watch this week. Let me know what you guys think about those in the comments. Hit that thumbs up if you guys are enjoying the show so far. And those, I'm super pumped. I mean, earnings season is always my favorite time of the year. I think this is kind of when this channel really comes alive. It's when I come alive, that's for sure. So I'm super pumped for it. And this is a very, very first legitimate week of earnings. We got Tesla, Netflix, American Express, and some of the other bigger names. And then the week after, we'll get into some of the other big tech names like Apple and Amazon and some of those. And so it's gonna be a really exciting time to see how people are thinking right now, right? Because you have a lot of people in the camp of, oh, we're about ready to go into a recession. People are slowing their spending. We're going to see a significant slowing and growth. But then we're seeing some of these and some of the smaller companies that were reporting when we weren't in earnings season talk about how they're seeing this wild demand and consumer spending. And that makes up 70% of the economy. So if consumers are out there spending despite inflation going up and despite some of the supply chain issues we're experiencing and some of the variants that are going around on COVID, I don't think that there's any reason to really be all that paranoid. And I still think that being in the market is going to pay off. I still remain bullish throughout the rest of the year. Do we see a recession this year? In my opinion, we don't. I think that if we were to see one, it probably won't take place until somewhere around mid to late next year, if we see it at all. I'm not ruling out the fact that we don't even see one. So those are my thoughts. And this is going to be very telling. This quarter for earnings is going to be very important for the rest of the year, in my opinion. So let me see what some of you guys are chatting about. What do you think of JB Hunt's? What do you think about JB Hunt? It's fallen a lot recently. Yeah, they have earnings on Monday, I believe. Let me see here. Transports have gotten absolutely crushed. So I think that, let's take a look at the JB Hunt chart. JBHT is the ticker symbol there. Yeah, the transports in general, and this kind of looks a little bit like that Union Pacific chart. So as you can see here, obviously sold off significantly, and I think that to me, this looks like JB Hunt could be a potential buy. Again, they have earnings tomorrow. I think earnings are after hours tomorrow. So I'll be giving my reaction to those. Make sure you guys are tuning in. But I think it's finally found a bottom, and I think there's pretty good risk reward here. It's clearly oversold on RSI. It looks as if it's held this bottom virtually since the beginning of the month, April 7th. And so it hasn't really gone below that. I really actually do like JB Hunt here, and I think the transports in general. Is JB Hunt the best one to buy? No, I think that ODFL is probably one of the better ones. That's Old Dominion. And you could also look at GXO or XPO. Those are also logistics companies in transports. You can see that this is obviously not done very well either, but I think that they are going to turn around significantly, especially given the demand that we're seeing. So I actually like this, John. So appreciate the question. I think that JB Hunt could do very well. All right. So many streaming platforms out there. They need to step up their game, says Alan, referring to Netflix. Yes, couldn't agree more. I definitely think that's something they need to do for sure. Looking at Milton Williams says maybe if Netflix gets into interactive gaming, maybe it might help them. And that's what they're looking to do, right? I mean, I think that that's something that could set them apart. That gives them that competitive edge that nobody else is really diving into. Amazon has Twitch, but it doesn't seem as if Amazon's done much with Twitch, right? Like they haven't really grown the platform, and I don't think that they intend to do that. So if Netflix can kind of sneak in, maybe they do have a streaming service and it's just surrounding around video games. We'll see. But I agree. Okay. GM had a video of electric truck, has 400-mile range, and I like its looks. Also many other options. Let me know which one that is. Is it the well, it's the I think it's the what's the Cadillac EV? The name just escaped me, but the Cadillac EV looks sexy. Loving that. Loving the Cadillac EV. What is that called? Lyric. I think it's the Lyric. Cadillac Lyric, maybe? Anyways, it looks awesome. Milton says, funny question. What do you think about Tesla getting into high-speed rail? Isn't that what the Boring Company was doing, though? I thought that's what the Boring Company was doing. It hasn't really done much, so I'm not sure how I feel about it at all. Elon's done some really great things. Obviously, we know that he can do it all. Now he's getting into social media. But if I had to give one thing that didn't really pan out, or at least hasn't panned out yet, it's the Boring Company, and they haven't done anything. It's boring. They had one tunnel that actually did something, but I don't even think it's making money at all. I don't think it even looks like it's going to make money. So, and the construction of the other tunnels just haven't really came to fruition. So it's been really tough sledding as far as that's concerned. Raylan says, I'm looking into cybersecurity. CrowdStrike has been slowly climbing. Also, there's a lot of housing data out there this week. So curious to see how the REITs will do, and Home Depot, since they have been rallying. And yeah, so Home Depot was actually one of the stocks that I put on for the top stocks to watch for April. As I'd mentioned when we had that stream, I said that the $300 area was going to be an interesting area to watch, and it's bounced off of it nicely. Obviously, had a little bit of consolidation. Here's the daily chart, and consolidation here after the bounce. And we'll see if this continues to go. But I'm with you, Raylan. I think that this is one certainly to watch for, and the home builders too, because we're seeing 30-year mortgage rates now over 5%. Now they've gone up very high, very fast, and I think that there's going to be, some sort of pullback. We'll see what happens, but if interest rates continue to go up like they are, which I don't think is sustainable, it's going to be pretty tough sledding for some of the REITs in general. So yeah, that's definitely going to be something to watch, especially the housing data for sure. Target also looks great. I think Target out of the big box stores, Raylan, is actually the better one of the lot. We're looking at Walmart, we're looking at Costco, and we're looking at Target. I think Target has more upside here. We look at Walmart, and it hit all-time highs several times last week, and it's still on the path of breaking even more. I think that Walmart still goes higher, by the way. It's not that I don't like Costco or Walmart. I love both of those. I just like Target more, just because I think the upside is still more substantial than the other two. I'd much rather buy Target that is sitting well below its all-time highs rather than trying to chase Walmart and Costco at their all-time highs. And again, this isn't me saying that Costco and Walmart can't keep going up, because I strongly feel like they will. It's just that I like Target here because I think that they can hit their all-time highs and in a pretty quick fashion, especially given the fact that their earnings were really, really good. And it just almost closed over the 200-day moving average on Friday. If it closes over that tomorrow, I think that, watch out. Target can really start to make some moves here. We see a close over that 200-day moving average. So I really like that Target chart as well. Zane says, this is a really good segue. Any opinion on home builder stocks, DR Horton, Lennar? They have come down way too much. Is it time to nibble? This is really interesting. I love DR Horton. This stock made me a lot of money last year, and I think that this is going to be one to watch for. Maybe, Zane, wait until the housing numbers come out and see how DR Horton reacts. We have a long ways before they report earnings again. And so there's a lot that could happen, especially as far as the headlines are concerned, when it comes to home buying and home building and the supply chain and how it all relates to inflation. So I do like DR Horton. There still is very much an inventory problem for new homes. And I think that DR Horton and all the home builders still benefit from being able to build new homes. It's just that, can they build new homes and actually make money off of it? And that's kind of been the problem for these companies and the home builders in general. So I do think that there's little risk reward here. I think there's lots of upside, obviously, and maybe a smaller amount of risk if you were to nibble on this. So you have my blessing as far as that's concerned. I think that DR Horton certainly could stand to be bought up here in the 70s. It might be a little treacherous for the remainder of the year until we get through interest rates kind of leveling out. But they're so volatile right now that I think that it's going to be still very bumpy. But I'd still say that the risk reward for DR Horton is actually probably pretty good. We look at KBH too. KB Homes, another one. Yeah, they're all starting to move up a little bit. Toll Brothers hasn't really moved as much. But yeah, I think DR Horton's probably my favorite one out of the bunch. You could also just go with the ETF. XBH, I think, is the ETF for that. Okay. All right, there we go. Just off topic. No, it's just my own cup. Just my own. Home builders PE is also really cheap. Yeah. What's DR Horton's at? Horton's PE, 4P is 4.5 times next year's earnings. That's wild. That's absolutely wild. So even lower than that. China's economic data release in about 2 hours. So that'll be interesting to see how futures react to that. Can Snap buy out TikTok? No, I don't think so. They don't have the money for that. There's obviously some of the talks around Oracle maybe buying them up. And I think Walmart had their hat in the ring when all that drama went down. But I think that that ship has sailed, and TikTok has just gotten so massive that they're probably not for sale. I don't think there's a price that TikTok would sell out for at this point. I would be surprised if that happened. But that's going to do it for me, guys. I'll be back here tomorrow at 3:45 p.m. Eastern time. And if you guys liked that list of stocks and want more of that, each and every day I put a list of 5 stocks that I have that on watch for that specific day, and maybe even in the short term or intermediate term as well for you swing traders out there too. So if you guys are interested in getting that watch list for me, I give a fundamental breakdown as well as technical analysis, and it's really in depth. I spend a lot of time on it each and every day. So if you guys want some of that and want to support the channel, and you could go ahead and hit the join button next to subscribe and become part of the Chaos crew. You can go to ownthechaos.com and find it there as well if you don't see the join button next to subscribe, and the link is in the description there. I would love to have you guys there. There's all kinds of extra stuff in there as well. You get access to our Discord group. Plenty of value to be had for just $4.99 a month. Again, it just helps support the channel. I certainly would appreciate it, guys. And I will be back here tomorrow. I'll be reacting to those Bank of America earnings, as well as JB Hunt and so many others. I can't wait to see you guys there tomorrow. Make sure you're tuning in. That's going to do it for me. Enjoy the rest of your night. Happy Easter for those of you who have celebrated, as well as Passover. I'll see you tomorrow. Bye.